What up, y'all? It's your boy Degenerate, and today I want to talk to y'all about the next 365 days of Bitcoin and a strategy that I would recommend for people that have an interest in investing but don't know where to begin. First off, investing is not the same thing as trading. If you want to trade Bitcoin, you can, but that is an entirely different ballpark than what we're talking about today. This is the current Bitcoin chart from 2016 down here. It's off the screen way down there, all the way up to the present. If you've never seen a chart before, each of these rectangles are where price is traded over the month. So each of these candlesticks represents 1 month of time. These wicks are prices that have been traded, but the end of the month did not close there. Last month, for instance, we're looking at June, opened at 8,500, 8,550. It had a low of 7,400. It had a high of 13,800. But at the very end of June, it closed at 9,700. No, it closed at 10,700. Excuse me. This month, traded all the way up to 13,000. It went as low as like 9,100, and currently it's trading around 9,790. Bitcoin has only had a very brief amount of time above $9,000. You can count it here. We had a very little amount of time in November 2017. We had the entire month of December 2017, January 18. We had some in February, and we've had these past 2 months. That's less than 6 months total that Bitcoin has been sold for $10,000 or more. Bitcoin has been around for 10 years. So 10 years versus 6 months, that's 5% of Bitcoin's life. And when people ask me about investing in something, I can't recommend anyone to do something that I wouldn't do. And I would not, if I wasn't actively managing my account, if I am investing in something, I'm looking at long term. And the long-term track record is people have not paid above $10,000 for Bitcoin. People have paid less. But it's a stable supply. There's not supposed to be over 21 million. But there's a lot of factors to consider here. But without going too deep into those factors, I'm sure if you're watching this video, you've done your own research to a degree. So I'm going to recommend you a strategy. And that strategy is called dollar cost averaging. There is a lot of papers out there on it. There's a lot of articles. There's a lot of other YouTube videos that can explain the concept a lot better than I will. But you're watching this one, so I'm going to do my best here. Let's take a number. Let's say you want to invest $6,000 into Bitcoin, rather than buying $6,000 worth of Bitcoin today, if it drops 10%, which is literally just saying instead of it trading at 9,800, it's going to trade down here 8,900. It's not that far of a jump. It was traded there the past 2 months, and the past year plus before that, it's traded less than that. You no longer have $6,000. You have $5,400. Unless you know ahead of time where you're going to get in and get out, don't put your money into one basket. If the biggest purchase of your life was going to be an asset that's highly volatile, that's an overwhelming amount of risk. The payoffs could be great. It could go swell. But you took an extreme amount of risk that you weren't sure of. I can't tell you what's going to happen in the future at all. And you can't reasonably predict either what the future is going to hold with Bitcoin. You can't. You can make assumptions, you can make hypotheses, but if you're wrong, where do you get out? At what point do you sell that? And are you taking into account all of the factors of what if you need that money tomorrow? What if there's an expense that you're not thinking of this month? So dollar cost averaging is taking your, and I'm going to recommend you decide ahead of time how much you want to have over the course of a year devoted into that. I would look at your monthly budget, for instance. And if you have an excess of $500 a month that you're just sitting in a savings account that's billing you 2% interest and you think it could be used better, then sure, go ahead and devote it to this. Or if that's $100, that's fine. Your goals are different than my recommend. I'm not telling you to put 500, I'm not telling you to put 100, I'm not telling you to put 1,000. Whatever makes sense to you. But decide ahead of time how much you're going to put in over the course of a year. And I would recommend either once a month, once every 2 weeks, or once every week to make that US dollar equivalent purchase into Bitcoin. So you can do that with things like Coinbase or Kraken, or on your phone you have the Cash App. But also keep in mind that different costs charge you different fees. You have probably seen an article that says by the year 2021 or the year 2022, Bitcoin's going to be trading for $200,000. And that's probably what got you interested in watching this. And that's the reason why you sent me a text and said, hey, I heard Bitcoin's going to go skyrocket. Should I buy? And this is why you're watching this. 100%. You could throw $6,000 in today and watch that 20x over the next 2 years, and you could have $120,000. But you also may have $0. Or if price ranges for the next year and goes up, you may have more money if you bought at a lower price. Like for instance, 10 goes into 200 20 times, but 5 goes into 200 40 times. I would much rather buy Bitcoin if it starts coming down and have more of it. And right now, this volume profile on the right is where a majority of people have bought Bitcoin based off of the current time frame. So when I bring the chart out to 2017 to now, most people have bought Bitcoin $7,000 or below. This is this value area. This is this darker gray and this lighter gray. And not how many people have bought Bitcoin at 10,000 or 11,000 or 14,000 or 16,000. So if the idea is to extract money from the market, because that's what a market exists to do, I have to convince these people down here to sell it to me. And people sell mainly out of fear. So would I expect Bitcoin to trade below these prices at some point? Yes, I would. But again, I don't know the future. And for you to have it sit on the sidelines and to time the market perfectly as a first-time investor, not a trade, just an investor, it's very unlikely. So, looking at some facts, probably about 300 days until Bitcoin's blocks, your reward is halved. So rather than 12 and a half blocks being released into the total Bitcoin supply every 10 minutes or so, only 6.5. Currently, inflation is about 4%, 3.25, or 3.75. You have about 1,800 blocks generated per day, and after this halves in 300 days, there's only going to be 900 generated per day, which for miners means that their electricity cost is still the same. Their hardware cost is still going to be the same. If not, it's going to be harder to mine it because more people are going to be trying to mine this Bitcoin. So that raises their price of mining it. I've heard numbers between $1,000 and $4,000 to mine a Bitcoin. That's how much it costs a miner, depending on electricity rate and how old their gear is. Like everyone's rates are different. But if at the moment it costs them $4,000 to mine one Bitcoin, when only half the Bitcoins are going to be released into the ecosystem, that means that Bitcoin at least has to be worth $8,000. Or else they would just turn off their machines. They would go do something else. This, for miners, it is a business to secure the network. That is a job for them. And if they decide that they can make more money elsewhere, they would do it. But this video is about dollar cost averaging and what I would do and how to maximize that. So getting back to this topic, you're passively investing however much you'd like to buy over the course of the year, and you divide that number by how active you want to buy. If you want to buy it every day and come back, sure, divide it by 365. If you want to divide it by 26, so every time you get a paycheck, you buy an equal amount, I think that's great. I think that'll be fine. And just every payday, log in, buy that dollar amount, forget about it. I would record it all in a notebook with the day. This is the main part of this strategy. You record how much Bitcoin you bought, down to the Satoshi. So you don't just have to buy one Bitcoin, straight up. Some people get confused about, you can buy 1% of a Bitcoin. You can buy 1.3% of a Bitcoin. You can buy 0.03% of a Bitcoin. It has so many more decibels, or it has so many more positions after just one Bitcoin. Down to one Satoshi. 1 million Satoshis, it's referred to Satoshi for the creator Satoshi Nakamoto. 1 million of those becomes one Bitcoin. That's just the terminology. If you want to buy 100 Satoshis, you can do that. It is divisible down to the smallest fraction that you want. And you're going to record all of this because of capital gains tax. Let's break that down. You are getting taxed on everything that you sell because it is income. And that is how the government pays for its projects. So here, for 2019, here's your income tax brackets. If you're making between $9,701 and $40,000 about, that money is being taxed at 12%. For any money over $39,476, you get taxed at 22%. Every Bitcoin that you sell, every piece of Bitcoin that you sell is going to be taxed according to what tax bracket you fall under. If you make over $510,000 a year, all of that money over $510,301 is going to be taxed at 37%. So what I mean by that is you bought Bitcoin at $10,000 and you sell it for $12,000. You made a $2,000 gain. That gain is going to be taxed. That $2,000 is going to be taxed according to your tax bracket. So if you're in the 22% tax bracket for this income, say your day job already gives you $40,000, the 22% of that $2,000 profit is going to be taken away. That is $440 that you're going to be paying on that tax. You didn't make $2,000 off of that. You made like $1,560 off of that. That's 22% less, just straight up. I don't appreciate that, but that's what we deal with. But there's another thing. You said this is why you're paying attention. This is why you're recording when you bought how much Bitcoin and how much Bitcoin you bought, because of long-term capital gains. Long-term capital gains is tax on profits from the sale of an asset held for more than a year. It's great. If you make 0 to 39,000, you pay 0% capital gains tax. If you make 39,000 up to 440,000, you're only paying 15% capital gains. That is sick. Compared to over here, you're paying double that. You're paying 32% capital gains on $160,000 to $204,000 of income. That is crazy. So if you expect Bitcoin to be $200,000 next year or 2 years from now, you want to have Bitcoin held long term. You want to own it for more than a year before you sell it so that you can benefit on this long-term capital gains tax rate. If your strategy is to invest long term, you should take advantage of this. This is for you to be an investor. It is meant for your benefit. So snag a notebook, snag a little notebook, snag a little pen, and write down, I bought $500 worth of Bitcoin at $9,759, and I bought 0.2%. I bought 2% of a Bitcoin, or I bought 5%. Like, just fucking record it, and it's gonna benefit you so much. The flip side of this shit is, now that you have this written down, how much you bought, after the year, when you're approaching 1 full year, you're going to open up this notebook and you're going to see the price that you bought it at. If the price is lower than what you bought it at, you can sell that amount of Bitcoin and write it off as a loss on your taxes. If you bought Bitcoin at $10,000 and a year from now it's now trading at $5,000, and you bought $500 worth of it at $10,000 and you sell it, you are realizing a $250 loss. And that gets deducted from your taxable income. So if you were going to be making income in this bracket right here and you sell it, you're now no longer paying 22% tax on $250 because that was lost in the market. The only stipulation here is you cannot wash sell. There's a lot of information about this, but in short, the IRS won't let you buy an asset and sell it solely for the purpose of paying less taxes. So your loss will be disallowed if the same or substantially identical asset is purchased within 30 days. 31 days, it's okay. But 30 days is the time from the sell that you're going to recognize a loss before you can buy it back. So if you spread out that and then after 31 days buy it back, that's fine. Start it over then. But you don't have, if you recognize a loss, you are not paying tax on that recognized loss while still having other exposure to Bitcoin. It's a hedge. Your goal here is to hedge traditional markets, your US dollar, and probably greed. You're hitting this up because you think you're going to make money off this, just straight up. And that's great. I hope we all make money. But keep in mind, this is a zero-sum game. My goal is to extract money from the market. And if your goal is to extract money from the market, someone has to lose. So if you are buying all of this Bitcoin right here, recognize that you may not know who exactly is selling you this Bitcoin right now, but over the past 10 years, anyone that sells you Bitcoin, there's like a 95% chance that they're taking a fucking profit off of this. They are. You are buying someone else's bags. Not to scare you, but it's a zero-sum game. For them to make money, you have to be giving it to them. For you to make money, someone else has to be giving it to you. And exchanges are an elaborate way of transferring wealth from the impatient to the patient. So if you follow a dollar cost averaging schedule, you are not trying to time the market. You are trying to buy the average price over the course of a year. You're probably believing that the price is going to go up from there. And if it doesn't go up from there, your backup strategy is to claim it as a loss on taxes. And if it does go up from here, and it goes up a lot, you're trying to benefit from a shorter tax rate, from a smaller tax rate, because that's going to save you money. And would I rather pay 15% tax on gains that make you up to $434,550? Or would I rather pay 35% tax on income over 200,000 up to 500,000? Or would I rather pay 22% tax between 40,000 and 84,000? The choice is up to you, but just be smart about it. This, in my opinion, is the best way to get exposure to Bitcoin while mitigating your risk. If you want to get into trading and you want to manage your own portfolio, that is great. I will do my best to point you and resources that I have benefited from. But that's another discussion that you can never learn enough about. And this is my short answer to how do I gain exposure to the markets. This is how you do it. You dollar cost average over a longer period of time. And you set out your goals ahead of time. If you have any questions or comments or concerns, let me know. I hope that I have answered your questions, and I hope that you are more informed now than you were previously, and I hope you kill it. Remember that when Bitcoin trades at a price, it's going to be in the present moment. Bitcoin hasn't traded above 20,000 yet. So when that moment comes, it'll be in the form of now. And you can be ecstatic then. But right now, don't lose your serenity trying to invest everything right here. Because that's just stressful. I'm telling you from experience. Yeah. I hope you have a great day. Remember to manage your risk and trade safely. Cheers, y'all.